Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat and corn. I'll start with Chicago wheat. The double top formed over late April to mid-May is the start of a new potential pattern that has since evolved. You see, with drops from the double top appropriately reached the target below, well, some while ago now, I highlighted it at the time, had a pullback up again, not unanticipated, as I also pointed out as well, and we're on the next leg lower. The phrase next leg lower is important in understanding what is going on. This time the move lower seems a little more aggressive rather than a response to a bearish pattern, as we saw in May. Last week prices broke back below the short medium moving average, currently at 688. The medium moving average currently 666. The important 50% absolute Fibonacci line at 675. And the big 50% Fibonacci line of the big old 2012-2015 move at 670. Indeed, the only thing that halted the decline was last week's seeming revulsion at touching the gently rising long moving average below, currently at 638. However, the pullback up has been contained by the new bearish April to June shift pitchfork I drew last week, between the upper time currently at 668 and the middle time currently at 624. Indeed, this pitchfork has already done great work at showing the bearish angle of attack, and it may continue to do so. You see, the pattern I have been discussing up until now, the bearish pattern, is one I mentioned last week, a bearish halfway hesitation. That's since the heights of April. If this turns out to be so, and it is beginning very much to look like it might do so, then it would lead to how I put it last week, and I quote, then we would see a move well down through the long moving average and down to the lows of March. I've placed a very provisional target X in the 586 area. Once again, this is very provisional and depends a lot, very much a lot, on the long moving average being breached. So unless we start forming some sort of double bottom soon, that is what the picture looks like. End of quote. This is where we are now. The market will have to start forming a double bottom from now onwards, or it very much looks like we may have a significant try lower, possibly below the lows of this year so far. And as I speak, we've just breached, but not broken through it yet, we've breached the long moving average on the downside. Watch this space. Chicago corn. The 2021 uptrend, currently at 549, is an important uptrend that I highlighted 4 weeks ago, and again especially last week. Its role is not that of a supportive uptrend, that's not what I see as its role, but as another form of uptrend, used in a bearish pattern. I'm looking at this uptrend to act in a more significant role for a possible bearish bump and run reversal top pattern. Even now, as we apparently sit on the cusp of the pattern, we're only starting to see the beginnings of the move lower. The key will be, as I said 3 weeks ago, and I quote, if it turns out to be a bearish bump and run reversal top, then we'd also see a pullback up, but then a turnaround back down and a possible fast move lower, especially if we move below the 520 level. Hence, it will be interesting to see how far the pullback goes and if the market stays pulled back. End of quote. So we've had the pullback and we're now approaching the key 520 level. If, and both these subsequent points are big ifs, if prices stabilize and start moving back up, then we'll maybe form a possible double bottom. If, and as I've already mentioned, it is a second big if prices accelerate below 520, then we'll likely have a bearish bump and run reversal top. If that is the case, then we could see a possible target X down in the 450 area. It now all depends what we see over the next week in the 520 area to see which scenario is pursued. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.